Okay, everybody, how are we doing? So let's take a look over here. So at December 31st, this is what we had with Steffi Groff. So on January 1st, 2020, she sold security A for 15.1. So right over here. Okay, well, let's go through over here. So prepare the adjusting journal entry December 31st, 2020 to report the portfolio at fair value. Okay, so this over here, so it was a unrealized gain of 1,500. Previous fair value adjustments were 400. So fair value $1,100. Okay. So as far as doing this, as far as like the show the balance sheet presentation of the investment related accounts at December 31st, 2020. So you'd show investments at fair value, 54,500. So that's what we would do. And you'd have other assets and the like. So I'm going to actually, the other part of this too, and actually is actually pretty good. This is interesting. So the other part of this is that you would have, this is going to be current assets. This is as 2020. Then you would have shareholders' equity. Accumulated other comprehensive income. And this will be 1,500. And that's really where this, the unrealized holding gains or losses are ultimately going to. And you had 400 from the previous year. And so then that would be the fair value adjustment to get to this value. Then you're going to be crediting this over here as accumulated other comprehensive income. And then the journal entry for security A would simply be right over here. The cost is so my equity security, I'd be crediting this here for 17,500. I'm receiving cash of sold it for 15.1. Loss on sale of investments. And it's going to be simply be the difference between this. We're going to ignore the fair value. That's just going to be something, this fair value adjustment is just something we're going to be going over here and looking at throughout as we go through and do this. So to record sale of security A. Okay, so 12/31, or this is going to be 1/20/21. Okay, or 1/20/21. Good job, Tchaikovsky. Okay, so now let's take a look at the other part of this, which is assume the same information here, and that the report net income of 2020 of 120,000, and in 2021 of 140,000. Total holding gains equal 40,000 in 2021. So the comprehensive income, so you're going to have here, so for 2020, so my net income is going to be 120,000. Now, similar to Apple, what we're going to go through over here and do is we're then going to have net income, and then this is going to be a, right over here, unrealized holding gain. And this is going to be for 1,100, which is the amount of the adjustment we made through and did during the year. Okay, so our total comprehensive income is going to be 121,100. Okay. So very importantly, though, is that the 120 is what's going to go to retained earnings. This is going to go into this account over here on our balance sheet, other accumulated other comprehensive income or loss. It is not part of net income. Very, very important. Okay, so in 2021, our net income is going to be at 140,000. Okay. So it tells us that the total holding gains, including any realized holding gain or loss, was 40,000 in 2021. Okay, so right over here, so we've got holding gains, 40,000. Okay, we've got a realized gain of 24. Actually, we have a realized loss. Okay, so loss. Hold on for a second. Assume the same. Okay, so total holding gains, including any realized holding gain or loss, equal 40,000. Okay, so if this includes if it includes the losses, the unrealized gain must have been 42,400. Okay, so this is really weird. This is worded very, very strangely. So let's just kind of break this down here. So as we go through and look at this, so my unrealized holding gain is going to be 42,400 for 42,400. So this is including the loss. That means when I take the gain and I deduct the loss, that's how I'm getting down to the 40 grand. So my unrealized holding gain is going to be 42,400. So my total comprehensive income is going to be at 182,400. Okay, so when I go over here, though, to look at my accumulated other comprehensive income, and actually your book solution on this is wrong. So my accumulated other comprehensive income is actually going to be, it's going to be 1,500. That's what it was as of the beginning, because it includes 1,100 plus the 400 that was there earlier. So this is going to be 1,500. And then I'm adding in the unrealized holding gain of 42,400. So my ending balance is going to be 43,900. And so this is a different result than you're seeing from the book. And frankly, I don't like the way that this problem is worded. I don't think I would give it to you like this. I would just tell you what the unrealized holding gain was for the year. And then you would basically be looking at that compared to the prior period. So that sounds like fun. In any event, I will see you on the next video. Have a great one.